lesser known plan called the cash balance pension plan. Think of it like a 401k on steroids. It will, if you have sufficient earnings, it will allow you to save upwards of $200,000 a year during these really high income earning years, and set them aside because she's the only employee, or she's the only person in the business. She doesn't have to make contributions for any employees, which would be a drawback of a cash balance plan if you had employees.
Right.
There's some traps about this too, though. You need to make sure that you can fund it for at least 3 years to remain in compliance with the IRS and the Department of Labor. And you have to have the funds available to do so, right? That's usually the piece that scares people away, is the uncertainty of knowing what tomorrow and next year and the following year's income is going to look like to actually fund this amount of money for 3 years.
Yeah, I totally agree. So we actually had some instances where we presented the cash balance plan to clients in the past, and they're like, yeah, I want to save as much as possible.
Let's do it.
We know we give them the number. And then when it comes time to actually write the check, it's like $300,000. They freeze because they don't want to, put that much in there, or they don't have the money to put it in there.
But it's a huge benefit, right?
It's a huge benefit. Yeah.